Okay, everyone, welcome to the Stock Market Investors Bootcamp. Thank you, everyone, for connecting. Okay, let's have everyone join on time so we can kick off this bootcamp. It's going to be a transformative section. It's going to be mind blowing. I'm going to be revealing some secrets about the stock market to us so that we can understand it and know how it works and know how we can function in the stock market and see how we can also earn from the stock market. So I'll be showing you a lot of things and I'll be teaching you, and I'd like you to pay attention to the things I'll be sharing. So let me give you this rule. The rule number one: avoid all forms of distraction. Avoid all forms of distraction and ensure you pay attention. Rule number two: get a book, get a pen by your side, jot everything that needs to be jotted, and jot down your questions, as I'll be giving room for questions and answers at the end of the section. Is that fine? Okay. Thank you. Thank you. Okay, while we wait for others to join, I'd like us to just go straight into the boot camp for today. So we are going to be looking at a lot of things, and it's going to be a mind-blowing section. Going to be a mind-blowing section. So what are we looking at today? We're looking at the stock market investors bootcamp. So it's going to be a mind-blowing section, and I'd like every one of us to pay attention because I'll be sharing some things here today that you may likely not be able to see regularly. You may not be able to get on other platforms in terms of explanation. So I'll be explaining a lot of things to us about the stock market, how it works, and what it's about. So a lot of us have been asking, I want to know about the stock market. Some people even ask some funny questions about the stock market. But today, I'm going to take time to show you what the stock market is about and how it functions. So let's dive into today's webinar. Let's dive in straight so we can be able to see what we have. First of all, I'd like you to understand who I am. It's important you know who I am so that we can know how we can all function together. Please permit me to remove my face from the screen so we can all be on the same page. Now, the first thing you need to know is I'm Godwin Ogbede. You can call me Ambassador. You can call me Ambassador. You can just call me by my first name, Godwin. So either of the two can work. You can call me Godwin or you can call me Ambassador. The second thing you need to understand about me is that I'm a certified economist with over 5 years experience in the financial services sector here in Nigeria. So that's one thing you need to know. I'm a financial greatness strategist. I teach people how to take charge of their finances. I teach people how to make good financial decisions and also how to increase their finances like we are doing on this bootcamp now. So I'm a stock market investor and also an aspiring stock market analyst. I'm already in the process of that, but for now, I'm just investing in the stock market, and I'm working already towards that analysis part of it. Can you still hear me? Please confirm. Okay, please confirm. Okay. Now, what you need to understand is that the stock market is something that is very, very, very broad and is something that is great. Thank you. Thank you. Watching from Ibadan. Thank you so much. Thank you. Rhoda said he's studying economics too. Okay, so we have economists as well on the platform. Thank you. Thank you. If he says watching from Benin City, yeah, that's good. Thank you so much. Okay, so I'm the founder of Money Embassy. Money Embassy is a financial empowerment organization that is committed to equipping young people between the ages of 20, well, from 18 thereabout, but 20 and in their 30s. We empower them to discover their unique value. We empower them to monetize their skills. We empower them to also multiply their finances. That's what we do at Money Embassy. Our vision at Money Embassy is to make financial greatness common. We try to see how we can make financial greatness, the concept of financial greatness, very simple. We make it simple, we make it accessible, and we make it affordable. I'm the convener of Wet Factory. Wet Factory is a weekly webinar that holds live on Facebook, on YouTube every Thursday by 8 p.m., where we teach the modern principles for wealth creation. On Wet Factory, we teach things like how do you profit from the online space. We teach how to convert your passion into profit and many other things that we teach. at Wet Factory. Alongside this responsibility, I'm also the lead pastor of Purity Assembly International here in Edo State, Nigeria. So without much ado, let's dive into the teaching for today. Are you ready? Is somebody ready? Just let me know in the comment section. Say, I'm ready, I'm ready, I'm ready, I'm ready. Let's go. If you are ready, say, I'm ready. Thank you, Sarah. You're welcome. If you are ready, say, I'm ready, I'm ready. Now, let's go. This session is going to be in 3 dimensions. I'm going to be having 3 parts in this dimension, in this boot camp. The first part, we're going to be looking at the introduction. The second part, we will look at the basic fundamentals of the stock market. And the third part, we're going to be looking at how to start investing in the stock market. So it's going to be in 3 dimensions. I'd like you to please pay attention to these 3 dimensions as I'm going to be sharing with you some of the things that will inspire you and help you to understand what the stock market is about. Now, the introduction, I'd like us to dive into the introduction so we can have time to take questions and answer thereafter. Please, as I teach, you can write your questions down. You can write them down so we can take them at the end of the boot camp. Now, the first thing you want to understand is investment. What is investing? It's important for us to understand what investment is so that we're able to go deep into what stock investing is about. Now, investing is simply putting your money to work so that it can grow over time. So it is using your money today to make more money tomorrow. That's simply what investment is about. Trying to grow the money you make. Let's say, for example, you have 10,000 naira today. Investment is about planting the money, sowing the money in the soil to see how that money can grow into maybe 12,000 tomorrow, 100,000 tomorrow. That is what investment is about. So investment is simply putting your money to work so that it can grow over time. So it is using your money today to make more money tomorrow. So instead of just saving your money in the bank or just spending it, or you use it to buy something that can bring more money for you. And some of those things are things, one of those things what I'll be sharing with us today. It's one of the things you can use your money to do that can bring more money for you. And one of them is stocks. You can invest in stocks, you can invest in real estate, you can decide to start a business or support a business, or you can decide to save in a high interest account or mutual fund. These are investment vehicles that you can put your money into and begin to grow over time. So having said that, I'd like us to please pay attention to the next slide because I'm going to be dwelling here and I'm going to share a lot of things with you here. Let's look at the investment quadrant. Let's look at the investment quadrant. Now, on the investment quadrant, we have 4 dimensions in the investment quadrant. Now, I'd like you to pay attention to this quadrant because when I begin to explain it for you, you begin to see where you fall or where you belong to in this quadrant. So you'll be able to know, is this investment for me? Is this investment not for me? So you begin to understand this as I explain this quadrant for you, and you begin to know your capacity in terms of investment and what you can do in terms of investing. Now, on the first quadrant, we have the low return, low risk quadrant. Low return, low risk quadrant. On that quadrant, we have what that means. Let me explain that. What that means is it's an investment where you get low returns and the risks are very low. The returns you get are low. The risks also are very low. So you see that on the investment quadrant. The returns, the first quadrant is low return, low risk quadrants, where you have low returns on your investment and the risk attached to this quadrant are very, very, very low. Now, on this quadrant, we have investment like treasury bills. Now, most of the quadrant that falls under the low return, low risk quadrant are investments done in the capital market. If you are investing in the capital market, you have more of this kind of investments, where you have low returns, low risk quadrant. And in the money market, we have things like treasury bills, you have federal government bonds, you have mutual funds, you have fixed deposits. You see all these in the low return and low risk quadrant. Now, who are the people who can invest in this kind of quadrants? We have conservative investors. They are called conservative investors, or you call them the low-risk investors. Now, conservative investors are people who cannot watch their money depreciate or reduce. These are conservative investors. The reason why they invest or put their money into any savings is just for the money to grow over time. They're just saving. Like somebody wants to just preserve cash. Let's say, for example, you have 500,000, you don't want to do anything with it for this period, and you are saying, okay, the next 3 months, I don't have any major thing I want to do with this 500,000. Let me keep it. Instead of just keeping it in a savings account, you are putting that 500,000 in what we call in an high interest yielding account, savings account, like treasury bills. Okay, try to invest in treasury bills, and in the space of that 3 months, you can get a percentage on your treasury bills. But you must understand that one, your money is secured, but the return you are going to get in that space of the 3 months is going to be low. So what you invest determines what you get on this quadrant. So majorly, the first quadrant is for those who want to preserve their cash. Now, the second quadrant is the low return, high risk quadrant. Now, the low return, high risk quadrant is majorly for inexperienced investors, inexperienced or misinformed investors, people who are who are cajoled into investing into a business they don't understand, like CBES, CBES, like MMM and others. They fall under this quadrant. Many times you may be saying, but the returns are high. How come it's falling under this quadrant? Let me tell you, the returns are not necessarily high the way you see it. On this quadrant, we have posing schemes and pyramid schemes. Now, this quadrant is a no. It's a worst quadrant when it comes to investing. Any quadrant, this quadrant, they tend to promise you high return on investment, but the chances of you losing your money in this quadrant is very, very, very high. That's the reason why we have a lot of people who are still weeping till today for the losses they made to MMM, for the losses they made to CBES. So this quadrant is a danger zone. I will not advise anyone who is listening to me now to be a part of this low return, high risk quadrant. And on this quadrant, you have, on this quadrant, you can have lending, borrowing money to people. The returns can be very low, but the risk of losing that money is also very, very, very high. Okay, now let's go to the third quadrant. Please, if you are getting any value, I'd like to see it on the comment section. If you are getting value, let me know in the comment section. Now, on the third quadrant, we have the high return, low risk quadrant. High return, low risk quadrant. Now, what does this mean? It means on this quadrant, you get your return on investment is high, but the risk of losing your money is very, very low. The return on investment is high, and the risk of losing your money is very low. So you have a minimal risk of losing your finances. Now, on this quadrant, we have things like equity investment. Equity investment is stocks. Do you get? Equity investment is stocks. We have stocks under the equity investment. We have real estate. We have commodities. We have skill-based businesses. Now, this quadrant, these things fall under this quadrant, the third quadrant, which is the high return, low risk quadrant. Now, so on this quadrant, the investors you find on this quadrant are the smart and strategic investors. Smart and strategic investors. And for you to invest on this quadrant, what you need is knowledge and timing. You need patience on this quadrant. So for you to get your high returns on this quadrant, you need patience and you need knowledge. So you must do your due diligence. You must observe your due diligence before you invest in the high return, low risk quadrant. And that's the essence of this bootcamp. Now, because for you to invest in equity investment, which is stock, you need knowledge, you need due diligence, and you need patience or timing. So I'm going to be teaching you shortly what the stock market is about and how you can invest in this quadrant. Now, the first quadrant, which is the last but not the least, is high return, high risk quadrant. Now, this quadrant is made jolly for aggressive risk investors. Aggressive risk investors. And you see, on this quadrant, you see the name already is high return, high risk. It means that when I put my money here, the tendency of me getting the returns, high returns, is very high. Or what I'll be getting back is very high. But see, the tendency of you losing your money on this quadrant is very, very high. So you have the tendency of getting big gains, and also you have the tendency of having major losses to your money. So on this quadrant, we have things like cryptocurrency. Cryptocurrency can the blockchain market can drop today, and your money, millions, can disappear all of a sudden. We have forex trading, we have startup investments, we have high growth stocks like tech IPOs. Now, these tech IPOs are investment companies that are just coming, or tech companies that are just coming into play for the first time. Let's take, for example, PiggyVest. PiggyVest, for example. Please, this example I'm giving is just tentative. These are not real examples. So I'm just giving this example. Okay, let me not use PiggyVest as the example. Let's use an app called Zara. For example, Zara app is just coming into play, and they need funding to boost their businesses. And they say, oh, we are bringing an IPO. IPO, I'll show you shortly when I talk about terminology in the stock market. IPO means your initial public offers. Now, they are bringing a share to the market and say, we need 20 billion naira to finance these projects. We need people to buy stock from us. You need to understand that the tendency of you making high returns from such investment is very high, but the tendency of you also losing your money from such investment is also very high. Why? Because you have not seen the strength of the company. You have not seen the business the business dynamics of the company. They have not been in the market before. So your tendency of losing money in such investment is high, as well as your tendency of making money is also very high. Now, have you gotten value there? Is that fine? Can I move on now? Can I move on? Oh, thank you, Ezekiel. Thank you so much. Thank you so much. Are you getting value? Are you getting value at all? If you are getting value, you can just click on the like button and drop your comments in the comment section. Okay, now let's move to the next quadrant. Let's move to the next part. Let's move. Okay, thank you. Let's move to the next part 2 of this bootcamp. We're going to be looking at the basic fundamentals of the stock market. Now we are getting deeper, the basic fundamentals of the stock market. Now, the first thing you want to understand is, what is stock? What is stock? Now, you need to understand that until you get the understanding of what this stock market is about, we cannot jump in to just investing in stocks. Because where people lose money majorly in investment is because they lack understanding of what that investment is about. Somebody reached out to me and was telling me, I have so amount of money. If I invest it now in this business, what will I get in return? I asked the person, the first thing you need is not capital. The reason why many businesses fail is not because of the capital, it's because of the lack of knowledge of how the business works. So many people want to invest in things they don't understand. So the first thing you should do when you are going to invest in, you need to go for knowledge. So knowledge is very, very key, and that's the essence of this bootcamp. Now, what are stocks? Stocks also called shares. I will explain the difference between stocks and shares shortly. Stocks, also called shares, are a type of investment that makes you a part owner or shareholder of a company. Stocks, or also called shares, are a type of investment that makes you a part owner or shareholder of a company. This means that when the company makes profit, you are entitled to a certain percentage of that profit. That's what the stock market is about. Let's say, for example, you are investing into a company like MTN, for example, and MTN makes profit of 100 billion today. From that 100 billion, they are going to, I'll show you shortly in the next 2 or 3 slides, they are going to cut out a percentage and say, everyone who are shareholders in this company, we are giving them 20% from our profits we make. So instead of you just buying end time from MTN and spending money on them, this stock market is an avenue for you to also be making money from the money MTN is making. So while they are making their profits, you are also making your money. While you are using you are spending money on airtime, you are spending money on their data, you are not shaking, because at the end of the day, when they are paying their dividends, they are going to return back your money to you, maybe times 10 of what you spent. So you see that the stock market is a very, very good investment that everyone needs to look into. So when you are a shareholder of a company, it also gives you the right to vote on certain decisions regarding the day-to-day operation of the business. Now, there are many businesses that do invite shareholders for meetings. I say, oh, attend this meeting, we're having a meeting, and when they invite you, you have the leverage to say, okay, I don't like this decision, let's make it like this, why not do it this way, let's do it this way. That is the privilege a shareholder holds when you have a share. So I believe we are getting value already. I believe we are getting value. So that's what the stock market is all about. Now, going back to the definition of stocks and shares. Now, let's look at a plot, the little pie charts we have by the side. Now, they need to understand that the stock market is regulated by the Nigeria Exchange, formerly called Nigeria Stock Market. So if you are joining us from outside the country, the stock market in your country is regulated by the stocks in your country can be regulated by stock market in your country. So it can be different name. There are some that's called them like Kenya should be Kenya Securities Exchange, something of that kind. So you can look at that from your country. But in Nigeria, the stock market is regulated by the Nigeria Exchange, formerly called Nigeria Stock Exchange. Now, you look at the pie chart we have about 4 companies listed on this pie chart. We have MTN, we have Presco, we have Dangote Cement, we have GTCO. Now, these are 4 companies, and each of these company, when you buy units of shares from this company all together grouped, is called stocks. When you buy a unit from each of this company, is called shares. Do you get that now? So shares is a pieces of a company's public offer. Do you get that now? So what are they giving to the public? What are they offering to the public? For you, shares is getting a portion of that, but stock is holding different companies together, put together to form what we call the stock. Now, we look at the pie chart. We have GTCO. GTCO, we have 8 units of shares was bought from GTCO. We have 5 units was bought from MTN. We have 4 units was bought from Presco. We have 3 units was bought from Dangote Smith. Now, when you buy this and put them together, you have, at the end of the day, bought from 4 companies, and you have this, you're now in the stock market. Now, you can decide to just buy from one company. It does not matter. But on this graph, we have different industry. Now, I will get to that point where I begin to talk to you about the strategies to invest in the stock market. Now, we have different industry here. We have banking, we have telecommunication, we have agriculture, and we have industry. So this is very important. So let's go further into this subject. Now, why should you invest in stocks? Now, the first thing you need to know is that stocks can grow your money more regularly than your savings account. So stock can grow your money more than regular savings over time. So if you are looking for ways to grow your money, I will tell you, take your money away from the bank and put it in the stock market, because that's a good way to grow your money faster than the normal interest any bank can give to you. Number 2, it's easier to buy and sell stocks than land or property. Now, listen, buying stocks is very easy, unlike buying a land. Buying stocks or selling your stocks is easier than selling land. So you see that the stock market is very, very key. So if you are looking for an investment that can give you easy access to your fund, you want to sell, you say, okay, I've made a lot of profit, I want to sell it today. There are people who are waiting to buy it today. So you don't need to start racking your brain and say, oh, where will I get buyers from? Buyers are readily available in the stock market every day. So you get that now. So the stock market is a good business and a good investment to look at. The third thing is that stock market helps you fight inflation, so your money doesn't lose value over time. You get what that means? So when you invest in stock, you are, instead of your money reducing, your money is increasing. So if you have 100,000 in the stock market today, your 100,000 can become 150,000 tomorrow, 250,000 tomorrow, 350,000 tomorrow. So it increases. So no matter the rate of inflation, your money keeps growing over time. So instead of your money depreciating and losing value in the bank account, your money gains more value. The fourth reason why you need to go into the stock market is that you don't need a lot of money to get started. Yes, you don't need a lot of money to get started in the stock market. In the stock market, you can start with 1,000 naira, you can start with 5,000 naira, you can start with, I think the list is 1,000 naira, but you can start with as little amount as you have based on the level of your pocket that you have. Say, okay, I don't have much money now, I just have 2,000 naira. How can I go into the stock? I'll show you how you can invest in the stock market very shortly. The fifth reason why you should go into stocks is that you can spread your money across different companies to reduce your risk. Now, you watch the pie chart I showed you a while ago, you saw that we had different companies. Let's go back to that pie chart. You see that we have different companies. We have Dangote Smith, we have Presco, we have NTM, and we have GTCO. So you see that in the stock market, you can spread your money across different companies to reduce your risk. And I'm going to be showing you the strategies on how you can do all that. Now let's move forward. Some of the common stock market terminology. So when you are in the stock market, or you see somebody tell you you are investing in stock and it gives you, mention a word, so you'll be able to understand this word in the stock market. Now the first word in the stock market is the word called dip. Dip, D-I-P, dip. Dip is a slight drop in the price of a stock. Now, in the stock market, let's say, for example, you bought a stock today for 100 naira. You can convert that to the country, your currency in your country. Let's say, for example, you bought a stock today for 100 naira, and tomorrow there's a dip. If there is a dip, let's say the price of your that particular stock dropped to about 98 naira, for example, we say there is a dip. So a dip is a drop in the price of a stock. Do you get that now? A dip is the drop in the is a slight drop in the price of a stock. And in the stock market, if you are very, very, very smart, you remember the third quadrant, smart and strategic investor. If you are a smart and strategic investor in the stock market, when there is a dip, it is the best time to buy, not to sell. Do you get that now? When there's a dip, it's the best time to buy, not to sell. Now, recently there was a dip in the US stock market, and there was a drop in the price of Tesla, and many smart investors bought. And in few days, the price of the stock went back up. You see, smart investors is what is needed in the stock market. That's the essence of this bootcamp, so you can understand how you can maximize the returns in the stock market. So when there's a dip, it's advisable to buy in the dip. The second thing you need to know is rally. Rally is an increase in the price of a stock, and that's a good sign for investors. When there's a rally, it means there's an increase in the price of a stock. So if we are communicating today and I say there's a rally in the market, it means that there's a rally in the price of MTN. So it means that there's an increase in the stock price of MTN. Do you get that? And that's as far that is profitable. And you know what? There's more rallies in the market than there is a dip in the stock market. Now, the third thing you need to understand is limit order. When I start introducing you into buying your shares by yourself from a stockbroker, you are going to see these things. Limit order. Limit order is an instruction to buy or sell a security at a specific price. Let's say, for example, the price of MTN, for example, now is 3 naira in the market. Limit order is today I want to buy MTN for this 3 naira. Do you get that? So that's limit order. You are buying at a specific price as it is set in the market. Or you can say, okay, I want to buy MTN for 3.2 naira, for example. So that is what we call limit order. Then we have the next one, which is market order. Market order is an instruction to buy or sell a security at the best available price in the market. That's market order. You are buying a security at the best available price in the market. That is what we call market order. Let's say, for example, you are saying, okay, I don't want to buy this stock by myself. Let me give to the stockbroker. I'll tell you what the stockbroker is in the course of this training, so you understand how the stockbroker works. Now you say, okay, I don't want to buy by myself. Let my stockbroker buy on my behalf. So you click on the market order, and on the market order, your stockbroker can go to the market and check and say, okay, we have 100 naira here, but I think the best price you can buy today is 101 naira. So your stockbroker buys for you at a market order, the best available price in the market. Now, who is a stockbroker? The next one, a stockbroker is an individual or a firm that facilitates the purchase and sales of stocks on behalf of investors at a fee. Now, stockbrokers are either individuals or firms, but majorly firms, organizations, licensed organizations that sells or buy stocks on your behalf. The next thing you need to know is a dividend. Okay, dividends are payments made by a company to its shareholders from its profit. When a company gives you part of their earnings, is called dividend. Now we have the next one, which is called capital gain. Capital gain is the money you make over time in the stock market. Now I'll show you later on the two ways or the ways to make money in the stock market, but let's move forward. So capital gain are the profits you earn from selling an investment for more than its purchase price. You bought MTN, for example, at 100 naira. today, and MTN is now 200 naira tomorrow. Maybe what you bought with 10,000 naira. Your money is now 20,000 naira. You have gained 10,000 naira extra to your money. It's called capital gain. Please let me know in the comment section. Is this educative? Please go ahead now. Type in the comment section. Let me know. Let me get your comment. Let me get your comments. Are we doing that already? Okay, thank you. Okay, let's move forward to the next one. The next thing you want to know in the stock market, we have the portfolio. Now, what are a portfolio? Portfolio is the collection of all the stocks you own in the market. All the stocks that you own in the market is called your portfolio. Then the next one is your initial public offer. Thank you. Oh, thank you, Pius. Pius said extremely educative, sir. I would love to reward this session again. Okay. Now you have initial public offer. The first time a company is offering its shares to the public for purchase. Remember what I told you when we talk about initial public offer. Then we have the two last word. In the stock market, there are two major animals in the stock market. We have the bull and we have the bear. So if you search on stocks, you can see these two animals appearing, and they are the bull and the bear. Now the bull are investors that are happy about the increase in they predict the increase in the stock price. Now the bull is a period of rising stock prices, generally lasting for an extended period. So when there's bull, we call it the bullish market. The bullish market. Do you get that? The bullish market. So we'll look at that as we go further in this teaching. So we have the bullish market, and we also have the bearish market, which is a period of decline in the stock price, also typically lasting for a while. Okay, now I think this is very, very, very clear. So let's move forward to the next. What are the types of stocks? Please pay attention to this section, because this section will help you to understand better what this is all about. You need to understand, okay, where should I put my money and what kind of stock should I buy? This will help you understand it better. Is that okay now? So now let's go. Now let's see, what are the types of stocks? Now the first type of stock we have is dividend stocks. Dividend stocks. Dividend stocks, these are stocks from companies that share part of their profits with their investors regularly. Remember when we started talking about the type of what we talked about previously, about companies that share their dividends and give you part of their money and all that. So this is one of those companies, dividend stocks. Dividend stocks are stocks from companies that share part of their profits with their investors regularly. This payment is called what? Dividend. Now, people like dividend stock because they can earn money even without selling the stocks. Now, recently I bought a share from GTCO, and in about 4 or 5 months later, I was paid dividends for my investments, and the dividend was a good amount of money. The money just dropped in my account, lovely amounts. Do you understand that now? That's called dividends. So dividend stocks are the stocks that you buy and you gain dividends. They pay you dividends for buying the stocks. Do you get that? So dividends are profit, the shares you have from the aggregate net profits of a company. Now, what are some of the examples we have? Please let me quickly say this. The examples I'll be giving here, they are not advice. They are not advice. Don't take them as a recommendation to go and buy stocks. I'm just giving you example of companies that falls under dividend stocks that can pay dividends over time. Please don't take them as recommendation, because if you buy their stocks at the wrong time and there is a dip, then you can lose your money. So you get that now. So you need to understand that at this junction. We have MTN Nigeria, we have GTCO. These are dividends paying stocks. But what are some of the things you must consider before you buy a dividend stock? Number one, you must ask yourself, does this company pay dividends regularly? So this company, if I want to buy shares from a company now, you must ask, does this company pay dividends regularly? The second question is the company profitable? Do you get that? Does this company pay dividends regularly? Number two, is the company profitable? That's the second thing. Number three, are the dividends stable or growing each year? Let me explain what this means. Now, there are some companies whose dividend that they pay to customers, let's say, for example, the shareholder will say, okay, this year we are paying 6% per shares that they bought. So if this year they pay 6%, next year are they going to pay 6%, or they are going to pay less, maybe 2 naira per shares? So you need to understand this before you buy shares from any company. So these are very important things you must look at while buying shares. Now let's look at the graph by the side. On the pie chart, we are buying from MTN. Now these figures here are just examples. They are not real figures, but just for so you understand it. Now on this chart, you discover that if you go down to the bottom of the chart, on the pie chart, you see that MTN made a total revenue of 10 million naira. Now, from their 10 million naira, they decided to subtract their cost, which include their debt or the tax to government. So after removing the cost and the tax, maybe salary payments and all that, they removed 30 million naira at the end of the day, meaning they are left with 70 million naira. Now, from 70 million naira, we call that 70 million naira net profit or bottom line. Now, the bottom line of the company is one thing you must look at while buying stocks. Now, they have their bottom line, which is 70 million naira. Now, from this bottom line, we have what we call the retained earnings. Now, the retained earnings is, let's say they remove the retained earnings. Okay, we are going to be running this company continuously. Let's remove 50 million naira for the continuous operation of this business. So they remove 50 million naira. So what you have left after then is where they pay their dividends from. Do you get that now? So you have 20 million naira left. So MTN decided to say, okay, we made net profit of 70%. We are keeping back 20% to us. Then we are paying our customers or our shareholders the other 10%. So imagine if you have 5 people that bought shares from MTN and they made 20 million naira, and calculate your dividends and see how much you are going to get. Let's say you are just 4 persons that bought, meaning you are going to be getting about 5 million naira per the shares that you bought. Isn't that amazing? Okay, now let's go to the next type of stocks. Now, the next type of stock, we have the growth stock. The growth stock. Now, the growth stock are stocks from companies that are growing very fast. They are growing very fast. And they usually don't pay dividends. This company don't pay dividends. They don't pay dividends. So you need to understand that it's not all companies that pay dividends. But you see, they use the profit they make to grow the business as they are doing the business. They use their profit to do their business. So, but how do you now make money from growth stock? You make money from growth stock through capital appreciation. You get it? Capital appreciation is when the prices of the shares the price of the shares goes up, you make money from such stock or such investment. Do you understand that now? So the growth stock is a stock that grows very fast. They grow very fast. They have the tendency of growing over time, but they don't pay dividends. So one of those companies we have, these are examples. We have Seplat Energy, we have Shams Holding, and others. So we have a lot of them in that group. Now you need to understand that. Okay, now what are some of the things you must consider before you invest in this organization or this company? Number one, is the company revenue growing very fast? Is their revenue growing very fast? Number two, does the company have a strong future plan? And are you willing to take more risk? Because the tendency of them also slowing down can also be there. So you have to be very careful. And that's the essence why you need recommendations. You need to get profitable recommendation from time to time to know if you should invest in such a business or not. Now, let's go to the chart by the side. Let's go to the chart. Is this educative at all? Are you learning anything? Please let me know in the comment section if you are learning something so profound. Let me know in the comment section if you are learning anything so profound. Let me know in the comment section. Please, let's go ahead. Let me know in the comment section. Okay. Okay. Now let's move forward. Now on the chart, you see that we have on the chart we have Seplat Energy. These are just no, are not real figures. I just figures that are just for education purpose. Now we have Seplat Energy. Seplat Energy decide to you see their share price. Their share price was about in 2020 was about 20, let's say about 18 naira in 2020, and you see that the share price increased from 18 naira in 2020 and rose to 26 naira thereabouts in 2021. But in 2020 2022 there was a dip, so it fell in 2022. These are not real figures. They are not real figures. They are just explanations. That's why I told you that while investing, you must check, are you ready to take the risk? Now, but in 2023, you saw the increase. There was an increase from the dip. There was a rally, and that rally was about 35 naira. And from there, it also increased up in 2024. That is what growth stock is about. The tendency of them losing their money or making more money is there. Do you get it? Is there. So let's move to the next one because of time. I'm so glad you are learning. That's very good. So now let's look at the next type of stock. We have the value stocks. The value stocks. And the value stocks, these are stocks that are cheaper than what they are really worth. They are cheaper than what they are really worth. So investors buy them, hoping their price will go up later when people realize their true value. Now, these stocks, you underrate them in the market. They don't look as if they can grow, because you look at them and say this stock cannot go anywhere. But this one will work. I'm not putting my money in this one. But when you put your money eventually into this stock as a smart and strategic investor and put your money into such stock, the tendency of the stock rising is there. Do you get it? Now, example of those stocks are Transcorp. We have Transcorp. We have a lot of dimension: Transcorp Power, Transcorp Hotel, and other. We have Fidelity Bank. These are just examples. They are examples, please. They are not recommendations. They are examples. So they are examples. So now we look at if you look at, I'm using in the chart. I use Fidelity Bank as an example. Let's say, for example, this chart belongs to Fidelity Bank. So the red line is the market price, while the yellow line is the intrinsic value. Now, the market price, people underrate it and said, in 2020, this stock cannot go up. It's just 5 naira. But before the year runs out, in 2020, Fidelity Bank shares rose from 5 naira and jumped to about 16 naira. Can you see the rise? Can you see the increase now? So people underrate the stock and say this one cannot perform. But smart and strategic investors who understand how the market works invest in value stocks, and with the hope of increase, and majorly there's always an increase. Now, if you see the chart in the progression in 2021, the shares price was about 12 naira, and in 2021 the intrinsic value also increased to about 25 naira. That's a huge increase. Now you see the progression there, how the value stock also increase. So the value stock is a good way, it's a good stock to also look at when it comes to investing. But what are some of the things you consider before you invest in a value stock? The first thing you need to ask yourself is the company strong? Is the stock price lower or low compared to its earning? Is the stock price low compared to its earning? You look at that. You look at, is the company strong but not popular right now? There are some companies who are not popular, but they are very, very strong. There are a lot of companies, I can't mention enough name now. There are a lot of companies like that who are not strong. You can check that in your country. There are some companies who are, you may not be hearing their name, but they are doing massively well in terms of volume. So these are some of the stuff you want to look at. Now, the next thing you must ask yourself as an investor, are you patient to wait for the price to rise? So if you're not patient to wait for the price to rise, then you may not consider the value stock. Now we have just two more. Oh, I love the blue chip stocks. The blue chip stock is the fourth type of stock. The blue chip stocks are stocks from big, trusted, and successful companies. These companies, they have been around for a long time, and they usually pay steady dividends. You see, they pay steady dividends. So and they are seen as safe and reliable. Blue chips company, they are reliable and they are safe. Do you get that? Now we have in such company, we have the Dangote Cement, we have Nigeria Breweries, they fall under such companies. So if you are thinking of considering investing, you can think about all these companies, but please, you must do it based on recommendation. Don't just jump into them, because you can buy at the wrong time and you lose your money. Okay, now some of the things you must consider before you buy from the blue chip stock Is the company well known and respected? So you know, for Dangote Cement is well known. Okay, that's a good one. So has it been paying steady dividends? Yes, they do. So is it a market leader in their business? Perfectly well. So you see that there are some things you must consider before you buy the blue chip stock. So if you watch the graph by the side, you see that the Dangote share prices, dividend price was rising. Let's see that properly so I can explain. Okay, now you see that in 1999, so these are just not real figures. They are not real figures. Now in 1999, we have the dividend of 1 naira per shares. So you see that there was an increase from 2 naira to 4 naira to 5 naira to 7 naira to 9 naira. So their dividend they were paying was increasing. So this year they paid 2%. Next year they are paying 4%. The other year they are paying 5% and others. So you see that these are companies that one should consider when it comes to investing. Okay, now let's look at the next type of stock in the market. We have the penny stocks. Penny stocks are not bad, but penny stocks are not stocks that are advised for new uh, new persons. If you are new in the stock market, I don't advise penny stocks for you because penny stocks they cost very little money per shares. They are very low. You can get penny stock for 1 naira per shares. You can get penny stock for 1 naira per share. Very low, and they are from small companies that can be very risky, very risky. So if you are investing in a penny stock, you can make a lot of money and you can also lose everything because penny stock can drop. I'll show you from the chart. If you see the chart, I was using a company ABC Transport as an example in the chart. Now you see that ABC Transport was making money. Their share price was about their share price in 2020 was 1 naira or 1 naira. Yes, 1 naira in 2020. It rose to 2 naira. People were happy. Wow, we are making money. And before you know, from 2 naira, it drops down to 1 naira. From 1 naira, it was like there was a rally and it moved again to about 3.2 naira. People were happy, like, oh, this stock is making money. And before you know, the stock dropped down again to 2 naira. It went back to 2.5 and like that until it finally crashed in 2021 in 0.5 naira per shares. So you see that the risk in penny stocks are very high. So you see, I don't advise people if you don't understand the market and you don't get profitable recommendation, I don't advise a penny stock. And one of the challenge of the penny stock is this. Penny stock, the challenge of penny stock is that you hardly find people who want to buy from you when you want to sell. So that's why penny stock is not really a good area to look at in the penny stock. So now, what are some of the things you consider before you buy the penny stock? We have, is the company real and trustworthy? You must check that. Why is the stock price so low? Why is their stock price so low? And are you okay with the high risk? So it's an high risk type of stock. Let's look at the last one, then we'll move forward. Now, the last type of stock you want to look at is the defensive stocks. Defensive stocks are stock from companies that people always need. Now, these stocks they produce things that people need all the time. Do you get it? Even in hard time, during COVID, whatever the issue is, if there's a pandemic now, these people will always need it. Do you get it? Now, you get example like food. Whether there is pandemic or no pandemic, people will always eat. So penny stocks, defensive stocks are stocks that you find in the production industry. They are always producing things that people always need. You have food, you have electricity, you have medicine, you have clothing. People will always need this thing no matter the economy. Do you get it? So this stock they stay strong even when the economy is not doing well. Do you get that now? So example of such stock, we have the Dangote Sugar and we have Cadbury Nigeria. So these are stocks. So if you watch the charts, you see that I used Dangote Sugar for example. Now you see that there was an increase in their shares from 2021. You see the rise was going from 2021, 2022, 2023, 2024, 2025. There was always an increase. No matter the economy, even if the economy is not stable, these companies will always be stable. Do you get that now? Yeah. So but before you buy from such stock, it's important you get profitable recommendations before you buy from any stock. So let me say that as a counsel. Before you buy any stock, always get recommendation. Should I buy? Should I hold on? Should I sell? So I'm going to show you that shortly. Now, the summary of everything we have said in this section is summarized in this. Now, we have the stocks type. We have dividend stock. What's the risk level? The risk level is very low. Do they pay dividends? Yes. What's their growth potential? Is very moderate. We have growth stock. Their risk level is high. Do they pay dividends? Yes, they really pay dividends. Then what's their growth potential is also very high. What's value stock? We have medium risk, medium risk investment. Do they pay dividends? Yeah, they pay dividends sometimes, not all the time. Not all the companies pay. Then we have the growth level is also very high. Then we have blue chip stock. What's their growth? Their risk level? Their risk level is very low, but do they pay dividends? Yes. And what's their growth level? Their growth potential is steady. Now we have penny stocks. What's their risk level? Is very high, very very high. Do they pay dividends? They really pay dividends. Little companies like that don't pay dividends, so they really pay dividends, and their growth potential is either high or is low. You cannot predict their level of growth. And the last one, dividend stocks, we have their risk level is low, then their dividend is sometimes, and their growth is steady. Now, I believe we have learned from this section. Now, this is part one. We have given part two. Then let's move forward on this same part. Now, what drives the prices in the market? What are some of the things that influences the increase in stock prices? What are some of the things that causes increase in stock prices? Now, stock prices are controlled by two things. If you're an economist Rhoda, you will agree with me on this. That supply and demand causes an increase in price. If there's an high demand on anything, then it affects the price. So if more people want to buy a particular share than sell it, a particular stock than sell it, then the price will go up. There'll be a rally. But when people begin to sell, people are selling, what happened to that stock is that it starts to depreciate in price. So you understand that now. So if there's an high demand in the stock, people tend to buy more. But when people start to sell more, the price starts to fall down in the market. So if people want to sell more, the price drops. So some of the things that influences this decision is, number one, company news. Now, if a company, let's take for example a company, in the banking industry, let's take Fidelity Bank, for example. Fidelity Bank came online and said, oh, our company, yeah, we made a profit of so and so amount of money, and so thing happened and all that. What happened is, you see a lot of people driving into that company to put their money into the company. So company news, if a company shares good news, more people may want to buy its stocks, and that will push the price up. Do you get that now? So when a company share good news about their company, people will want to buy more. So that's why you see that companies are always bringing the news, their profit they make and all that, the development in their companies, and these things can increase the price. Another thing that can increase or reduce the price in the market is analyst reports. Now, the stock analysts are people that gives reports. They give you counsel on, should I buy, should I not buy, should you hold. So these are things that the stock analysts do. So if an analyst upgrade or downgrade a stock, it can influence the demand for the stock. So you get it. So the three common things you see an analyst say is, I think about four. There are about 4 or 5, but let me just say this theory. You have buy. They can tell you buy. They can tell you hold. They can tell you sell. They can tell you accumulate, or they can tell you it's under review. So you can get that. These are some of the things that an analyst give you in the stock market. Another thing that can affect the price of stocks is economic and political news. So if there's a good news in the economy, it can also affect the stock price or reduce the stock price. So if there's a news in relation to interest rate changes, inflation data, unemployment figures, political turbulence, it can affect investors' demand on a particular stock. The last thing that influences or causes the rise or fall in the price of stock is investor sentiment. Now, I talked about this when I was talking about the bullish market and the bearish market. So if an investor have the feeling that, okay, I'm confident that this stock is going to rise, more people will buy. But when an investor say this stock, the way I'm looking at it, I'm not sure it's going to stand the test of time, what happens is that many people will start to sell their stock. Now we are in part 3. Is anybody getting value at all? Are we getting value? Is this making sense? If it's making sense, let me know in the comment section if you are gaining value. How do you start investing in the stock market? How do you start investing in the stock market? I know this is what everyone will be waiting for. Now, before you start investing in the stock market, there are two questions you must ask. And that gives us number one. Number one, you need to define your investment move. Define your investment move. That's the first thing. You define your investment move. Now, the first move is investor. Am I going to be an investor in the market? I should be a trader. These are the two kind of people you see in the stock market: investors or traders. Now, what are the difference between these two? Now, investors, on one hand, they usually keep stocks for a very long time, sometimes for many years or even decades. So their goal is to make money in two ways, either through dividends and capital appreciation. Now, let me say this at this junction, that there are two main ways to make money from the stock market: dividends and capital appreciation. Remember, I told you about dividends, that dividends are, you are getting money from the profits of a company. They are making profits, then you are getting money from that company. That's dividends. You get? The capital appreciation is that you are, as the price of the shares increases, you are also making money. So a smart and strategic investor will stay with this, because you have way to make money in two ways. One, the company will pay you dividends when it's time to pay dividends. Number two, when the stock prices increases or the share price increases, you will also make money through capital appreciation. So you get it. So it's two ways. So you make money from dividends. Let's say, for example, there are companies that pay dividends twice a year. There are some that pay 4 times. There are some that pay once a year. Let's say, for example, a company like GT Bank or GT Co that pays dividend twice a year. Now, first quarter, they pay you dividends. Let's say they pay you, depend on your investment, they pay you, let me just give you a rough figure. They pay you 200,000, for example, as your dividend for your investment. This is not your capital in the investment. Understand this? This is not the money you put into the investment. This is the dividend. Now, while your money is still in the stock market, as the prices of the shares of GT Bank increases, your money in the stock market increases the same time. Isn't that amazing? So for smart investors and strategic investors, this is how they make money from the stock market. They stay as investors, but investors leave their money for a while and they make money over time. Now we have the traders. Now, if you are a trader in the stock market, you hold stock for a short time. Now remember, the investor, they buy and hold for long term. That's a long-term strategy. But the investor, they buy and sell. That's what traders do. Traders, as a trader, you can buy your share today and sell it today. Do you get it? Yesterday, I bought a particular share of a company. The moment I was buying the share, as the thing was landing on my portfolio, I was making profit immediately. I bought 2 companies yesterday. Immediately, I was making profit. So if I'm a trader, as I make that profit, I can start to sell my share immediately and I've gained money. Do you get that now? That's how the stock market works. So if you want to become a trader, then you can sell your money. You can buy today in the morning, because the stock market in Nigeria opens by 10 a.m. in the morning and closes by 2:30 p.m. in the afternoon. So you can start to say, okay, I'm buying in the morning around 10:30. As I finish buying, by 2 o'clock, I'm going to sell. So between that hours of when you buy and when you sell, you must have made profit. If you buy from a good company, you make profit. But if you buy from a wrong company, you can also make losses. So you need to understand that very, very, very well. So instead of okay, I said something. I said instead, let me just read from what I said. I said traders hold stock for a short time, sometimes just for a few hours, days, or week. So they do so not to focus on how well the company do in the future. They are not concerned about the company make money in the future. That's not their business. Instead, they try to guess if the stock price will go up or down soon, so they can make money from the stock market. Isn't this amazing? I believe we are getting a lot of value already from this. So let's move. Now, how do you start investing in the stock market? Number two, you need what we call a stockbroker. You need a stockbroker. You need a stockbroker. So a stockbroker is someone or a company, majorly a company, that helps you buy and sell stock in the stock market. So they connect you to the Nigeria exchange. Now this is Nigeria, that's why I'm using Nigeria. So you can look at that from your country and look at what's the stock market called in your country. So the stockbroker connects you directly to the Nigeria exchange, and they handle the process for you. See, understand, let me give you a disclaimer here. Somebody was asking me, if I give you the money, can you help me trade? No, it's not advisable to give somebody money to help you trade. This is not trading. You are not doing forex trading here. This is, you are doing it yourself. You are doing it yourself, and that's what I want to teach you, how you can do it yourself, how you can liaise with the stockbroker directly, and you do your transaction yourself based on recommendations you get. Do you get that now? So the stockbrokers are intermediary between you and the Nigerian stock exchange, the Nigeria exchange, and they handle the process for you. So that in Nigeria, we have different stockbrokers, but majorly we have the Chapel E, the Arm Securities Limited. Their app is Invest Nigeria. That's their app. You can check out on that. We have Meristem Stockbrokers Limited. Their app is called Meritrade. You have the AROM Securities Limited. Their app is called AROM1. We have the AfriVest Securities Limited, which is their app is AfriInvest 2.0. We have the United Capital Securities Limited. Their app is Invest Now. So you can decide to say, okay, which of these stockbrokers should I go for? But how do you know the right stockbrokers to go for? Let me give you about 4 ways to choose a stockbroker. So choosing the right stockbroker. Number one, the stockbroker must be registered with the Nigeria Exchange or the SEC in Nigeria. So you must get that very well. Don't just say, I saw a stockbroker, people are using the person, let me go and. No, you don't choose a stockbroker like that. So you must choose a stockbroker that is registered. It must be registered with the NGS or registered with SEC. Number two, you choose a stockbroker with a simple and beginner-friendly app or platform to buy, sell, and track your stock. These are some kind of stocks you should look at, a stockbroker should look at for. Is their app easy for me to understand? There are some stockbrokers, when you download their app, in fact, the onboarding process is difficult. So it takes a lot of time. So at the end of the day, you are even confused that to still continue buying or you should just back out. So look at that. They have an application that I can buy from and gain profit at the end of the day. Then the third, you choose a stockbroker with a reasonable fee. You must profit making in the market. So you need to look at all that when you are buying or choosing a stockbroker. The first thing is you go for a broker that has good customer service in case you need help or get stuck. So these are stockbrokers that you should look at for. You get that now? So that's why I'm here. I can, when it comes to giving access to customer service, getting access to them by privilege, I can give access to certain stockbrokers and help you navigate when you have issues. Now let's look at the last thing we need to look at on this, then we'll take some questions and answer very quickly, is for you to start investing in the stock market, you need you need to create an account. And there are two major things that qualifies you in the stock market. The first one is called your CSCS, and the second one is called your CHN. You cannot start buying or selling stock in the market if you have not gotten your CSCS or you have not gotten your CHN. Now you may be wondering, what is CSCS and what is CHN? Now CSCS, the CSCS is Central Securities Clearing System. Now it's like your bank where your shares are kept safe. You get it? It's just like your bank account with the Nigeria Stock Exchange. Do you get that now? That's what your CSCS is. So it's like a bank where all your shares you bought are kept in electronic form. So you get that now. They help you keep record and store the transfer of your shares whenever you buy or you sell. So all the record of your shares, they are kept in the CSCS. So CSCS is it gives you like a vault where you keep your shares. Your shares are stored electronically. So you get that now. So that's the CSCS in the stock market. And see, one reason why you need to choose a good stockbroker, let me tell you this. Somebody walked into my office about a week ago and was complaining about the stock he bought and said he bought stock from a particular stockbroker, and now the stockbroker does not even know where they are again, cannot even remember the name of the stockbroker. And I was concerned, like, do you have CSCS or CHN? That is where the issue is. He was not having a CSCS, he was not having a CHN, and so you cannot trace that stock. So that's the first thing you must look at. When you buy a stock, you must ensure that you get your CSCS or you get your CHN. In case if you decide to say, I don't like this stockbroker anymore, I want to move to another stockbroker, you can move your CSCS and your CHN to a new stockbroker. Do you know why? Now listen to this. I think I'll give that at the tail end of this slide. But let's look at what CHN is about. CHN is your clearinghouse number. It's like your BVN in the bank. So it's uniquely attached to you. It's given based on your BVN or your NIN that you give when you are onboarding. So your CSCS is your bank account number, kind of a bank account number in the stock market, while your CHN is the BVN that you get in the stock market. So you see that these numbers are permanent, but you see that you need to understand, if you watch the tail end, I said that you cannot have multiple CHN or CSCS account except you register with a different set of details. Maybe you want to register another stock. Say, okay, I want this one for my child, I want this one for myself, and all that. So that's the way you can get more than one CHCS, CHN or CSCS. Okay, is that very clear? Good. Now let's look at what next. After you must have done all these things I've told you, then what's next? But let me know in the comment section, have you gotten value so far? Let me know quickly in the comment section. Drop your comment now in the comment section. Are you getting value? Are you getting value? Are you excited? Are you excited and ready to start investing now in the stock market? Are you ready? Are you excited? Okay. Can we get some of your your comments? Okay. Okay. Okay, now let's move forward while we get more comments and reactions in the comment section. Now, what next? Now you need to see, when you come to stock investment, one thing you need to know is that you need to get recommendation. You need recommendation. You don't just buy stocks because you see somebody talk about them. You need recommendation. You need someone that can guide you from time to time to say, okay, what stock should I be buying? What stock should I not be buying? And what should I be doing? And that's the reason why I'm teaching you all these things in this bootcamp. So you'll be able to know what stock should I go for. And like, if you are just joining now, you can go back after this session, the video will be available. You go back to rewatch from the starting, take time to understand what the stock market is about, and begin to see what dimensions can you buy into, what stock can you start buying at the moment. You get that now? Now you see, because I don't want people to make mistake when it comes to the stock market, we decide to create the Investors Tribe. Now, the Investors Tribe is a tribe where we give you recommendations, weekly recommendations. Every Monday, I give you recommendations on what stock should I be buying this week, what stock should I buy, and I can you can gain access to me to say, okay, sir, I want to buy this company. Should I buy it now? I'll be able to tell you, okay, buy it now based on these parameters and all that. And in the Investors Tribe, I'll also be showing you what are the ways to get stocks by yourself on your own. What are the various ways can I get stocks on my own? I want to get stock. What are the things I should look at for? What are the parameters? I'll be showing you. Now, if you see the value I've shared just in this bootcamp, the value you'll be getting in the Investors Tribe is going to be very massive. Now, so I'll be giving you the access to the Investors Tribe shortly. Now, in the Investors Tribe, there are a lot of things you're going to be learning. I will be teaching you. You have one-on-one mentorship session with me on investments. You have any challenge with your stockbroker, you want access to their customer service, you get that swiftly from you, get responses. I can help you reach out to their customer service. You get your issues resolved on the investors tribe. So that's some of the things you'll be learning. And see, in the stock market, there's what we call the golden rules of the stock market. The golden rules. The reason why people lose money in the stock market because there are rules they fail to understand. And I'll be showing you the golden rules of the stock market. Knowing when to buy, knowing when to sell, knowing when to hold, know when to accumulate, know when that stock is under review. Recently, some people got a recommendation from a particular person saying they should go and buy MRS. Unknowing to them that MRS was already delisted from the stock market. You see, I think it's effective by next month. It was already delisted. So if you buy shares from the MRS, you are not going to get your dividends because your money is gone. So you have to quickly go and sell it. And you see, when you want to come to sell it, everybody wants to sell. So you now start having issues at such a point. Now, maybe many of you are not aware that Dangote Sugar has been handed over to somebody else recently. So these are some of the things you need to understand, and I'll be teaching you in the investors tribe, so you can know what are the things to look out for and what should I be buying right now. And I'll be holding your hand um, from time to time in terms of investment. Now, on the investment, the investors tribe, the money embassy investors tribe, the access is 10,000, but I'm giving a discount for 5,000 naira. Now, this discount will last for just 48 hours. Now, between now and on Monday, if you are interested, you can make a transfer to Godwin Obede. You can see the account number displayed there. So you make a transfer to that account and you get access to the Money Embassy Investors Tribe. On this Investors Tribe, we give you weekly stock market recommendations. We give you golden rules of the stock market. We teach you how to choose the right company. We show you how to play safe in the stock market. You don't have to lose your money in the stock market. I will also show you the stock market investment strategies, how to use the bottom-up strategy, the bottom-down strategy. And we also have a one-on-one mentorship session on investing. And there you can also come to ask me questions on several investments that you're looking at and say, okay, should I invest in this kind of thing? Should I invest in this kind of thing? And I'll give you access and give you answers. So if you are looking at recommendations on what stock to buy, I am available at all times. So this is the access. So if you want to get that access, so you can use the account number which is stated there, and you can gain access to that tribe now. Okay, now let's go straight to the question and answer section. If you have any questions, please let me know in the comment section now. Let's take question and answer. Please drop your comments, your questions very quickly while I answer them swiftly. Drop your comment, your questions now. Drop your questions now. You have questions you want to ask. Let me take 1, 2, or 3 questions, then we move to the next agenda. We have just 6 minutes more. Please drop your questions very swiftly so